The head and shoulders pattern is among the most common chart patterns. However, not all traders know how to trade it properly. A lot of people actually incur losses when they try to anticipate this particular head and shoulders pattern. So in this video, we'll talk about when to expect it in the market flow, where it actually occurs, and the signs market makers give us to anticipate its occurrence. But before we go through, make sure you subscribe to this channel so that you won't miss any of our content as we upload. So we are going to explain this as the first part being what is the head and shoulders pattern, for the sake of those who do not know or haven't come across this particular trading pattern, and where and when to expect it in the market flow. So you need to know the signs that are issued within the market for you to anticipate if a head and shoulders pattern is going to come. Then how to trade it, which is one of the most important things on this particular chart pattern, so that you know when to pull your trigger. Then we'll have chart examples as we finish up the video. So what exactly is the head and shoulders pattern? It's actually a common pattern, as I've said earlier, but the way it is actually traded is different. It's most of the times with how people illustrate it, you incur a loss. So a head and shoulders pattern is basically the same as it says from its name. We have a shoulder, a head, and a shoulder. However, it doesn't come as this perfect within the market. It's actually wrapped in confusing structures. You'd see sometimes this shoulder will be much higher than what I've drawn, or this one much lower or much higher. It all depends on how the market makers wants to manipulate their traders. So in this case, we have what we call the shoulder, head, and the shoulder. However, a lot of texts actually states that you should trade when this occurs, right? A break and retest of the neckline of the structure. But if you look closely, you'd see that at this point, it's now a bit late to the party. And in this particular video, we are going to talk on trading at this zone, how to actually get this zone, and how to actually anticipate if this structure is the one they will use to reverse the market. So this is how it looks. As I've said earlier, it won't be as perfect as I've drawn earlier. You would see that we have this as our shoulder, then our head, and then our shoulder. So we want to be able to trade at this point. How do we do that? Let's see as we go with the video. So where do we expect this structure and when within the market flow? So the head and shoulders pattern is also called an extended second leg pattern. By second leg, we are saying we have 3 levels, and the most biggest point we anticipate to see a reversal is the third level. So we would say it's an extended second leg pattern. We were expecting to see an M like this, but later you'd see giving us a big second leg. So several times we see the market makers giving us some sort of 4 levels in one direction, and this gets us confused. You were actually counting your levels 1, 2, and for the purposes of new subscribers, we use the market maker method on this channel, where we do counting of levels, anticipation of market reversals, and so forth. So you've counted your levels 1, 2, and 3, and you reach the third level where you are anticipating to see an M like this. But you would see that the structure has been varied, and you have 4 levels: 1, 2, 3, and 4, right? However, this happens, the fact of having 4 levels, it happens when there are not enough contracts for the market makers to reverse the market at the anticipated level 3. So it's actually not beneficial for them to anticipate to reverse the market at level 3. So in short, head and shoulders pattern comes when the market issues 4 levels in one lateral direction. So if this happens when we see 4 levels in one direction, the next thing is now to anticipate the head and shoulders pattern. So the fourth level will create the head structure, right? So this becomes the head structure where we are now anticipating to see it as a head and shoulders structure. So before we illustrate how to trade the head and shoulders pattern, check out our free setups and analysis Telegram channel. The link is right in the description box below. This actually helps you to give you an idea of the overview of the markets. We send this before London, and sometimes in the US session. You can check the Telegram channel below. So how do we trade the head and shoulders pattern? After levels have been issued, we always anticipate the fourth level to be our head structure, right? Our entry is made on the second shoulder. We've said this structure has 2 shoulders like this, and this is the fourth level or the head structure, and we are anticipating to get our entry at this point. So the second shoulder is referenced from the first one, and we can use and apply the order blocks concept from the smaller time frames. If you are seeing this on the H1, you may shift to the M15 so that you find the rightful order block to anticipate this point. So let's jump over the charts to see how everything is done. All right, so this is odd against card, and I've already marked some levels earlier so that we can actually be able to move forward quickly. So as always, we said a level on the H4 is a week of drop, and this was a week of drop, consolidation, week of drop. So we had 1, 2, 3 levels. At this point, we were now expecting to see the market reverse. However, we can see the market gave us a fourth level. Therefore, we had 1, 2, 3, and 4. As I've said earlier in the slides, we expect to see the fourth level being creation of our head structure. In this case, this became our head structure, our first shoulder, our second shoulder. So this was now an order block derived from the lower time frames. Rejection of that will be our entry point. Therefore, our entry point was going to be on the second shoulder of our structure, making us the second level of the next cycle. We had level 1, level 2, and level 3. This is the normal cycle that we'll be expecting, where we'll have a proper M like this one being issued at this last level, right? This was okay. Then from there, we had 1, 2, 3, and a fourth level was issued, right? Whenever 4 levels are issued, we anticipate that the fourth level is actually a head structure, and this particular one is a head structure. Rejection of a smaller time frame order block was going to give us our entry point, right? And the market went our direction. So to summarize everything that I've said, a head and shoulder structure comes when 4 levels are issued on the market, and our entry is done on the second shoulder of the structure, not at break of the neckline of the structure. And this entry point is derived from the lower time frame order blocks. And if you do not understand order blocks, please check out our we have a playlist on that concept on this channel. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and see you on the next one.